Thanks for coming along and giving up your time to listen to us. My name's Joe Battershill. I'm a corporate executive with Sulphate of Potash. We also have here tonight, excuse me, Luke Jarvis, who's our Chief Commercial Officer, looks after our marketing of our product, and Sapan Guy, who's Head of Communications and Business Development for the team as well. The regulatory disclosure, I'll give you time to read that. No, I won't. So why are we here? Look, Sulphate Potash is advancing the development of a new, what we see as a globally significant sulphate of potash province in Western Australia. For a resource project, the concept is incredibly simple, which is music to my ears. Essentially, we will be pumping potassium-rich brine from large salt lakes, all of which are 100% owned by Sulphate Potash, into low-cost evaporation ponds, and then we simply let the sun and wind do their work and essentially beneficiate the potassium salts before we then harvest them with conventional equipment and put them through conventional process plants to produce a high-value SOP product. So the corporate snapshot, reputation is everything. And we have a very strong management team which has got strong ownership of the company, and also we have a very strong institutional ownership within London. Less so in Australia. It's more of a retail stock in Australia, but we're certainly looking to fix that. Importantly, in the second half of 2017, we did see an increased level of interest from brokers within London. I think as the analysts started to recognise the substantial value creation that is likely to occur through this journey. Excuse me. As I say, reputation is everything, and we have a board and management team which has got a significant track record of value creation within the industry. Our CEO Matthew Syme, he's been involved in several small cap and medium cap resource stocks within the Australian market, and Ian Middlemiss, our chairman, who is also chairman of Prairie Mining that was up earlier, has also been involved in a number of very successful ventures over the years. Ian's also chairman of Berkeley Energia, for those who might be familiar with that name. Previous successful ventures include Papillon Resources, which was a gold play in West Africa. Throughout Ian's involvement, the investors saw a 7 times uplift in valuation over 3 years, and more impressively, Mantra Resources, which was a uranium play in Tanzania, from IPO through to takeover, 5 years later saw an uplift of 100 times. On the technical side, we have a very strong representation from the world's leading experts in hydrogeology, evaporation, and potash processing. Carlos Perucha, who's our senior consulting engineer, he's worked on all of the major salt lake operations in North America and South America, including Potash Corp and SQM. And last but by no means least, our marketing team is led by Luke, who is here tonight. And Luke has 26 years experience in the fertilizer space, including the marketing of Serious Minerals' polyhalite product, which some of you here might be familiar with. So why sulphate of potash, or SOP? Well, it's the key source of potassium, which is one of the 3 macronutrients required for every plant. It is most commonly used non-chloride potash fertilizer in the world, with a robust demand outlook in our view. It is priced at a significant premium to MOP and is preferred for chloride-sensitive crops because the more popular MOP contains significant chloride. Essentially, it is safe for high-value specialty crops, including tree nuts, vegetables, fruits, tea, tobacco, turf. We also subscribe to the theory of agricultural megatrends, and over the last decade, and we believe going forward for the next 30 to 40 years, these trends demonstrate increasing global use of low chloride fertilizers as population increases and the availability of arable land decreases. And within that, we are seeing a distinct change in diets to increase levels of proteins and sugars. I won't dwell too long on this slide, but this demonstrates where we're seeing the significant lift in in middle class, especially within the Asia Pacific region. And this bar chart over here just shows how we're seeing an increase in proteins and sugars within those diets. So why evaporation of brines? Well, two simple reasons really. Firstly, because we can, because of where we are, and secondly, because the brine process has a significantly lower cost structure than the traditional SOP production, which comes from the Mannheim process. So this is the entire cost curve for the SOP market, which is about 6 million tonnes per annum, which compares to 60 million tonnes for MOP, the conventional MOP. And as you can see, the green bars are all brine producers, and the other colours are secondary and Mannheim process. Now, for reference, the Mannheim process basically takes MOP, it puts it into a furnace with a lot of gas, a lot of sulphuric acid, and it produces an MOP plus a hydrochloric acid byproduct. So the downsides of the Mannheim process are it's not particularly environmentally friendly, has significantly higher energy requirements, and it also has to carry the cost of the MOP and sulphuric acid. And importantly, this chart here, which I think is very important, this basically shows the price of MOP and SOP over the last 10 years. And as we can see, the MOP price fell quite dramatically with the collapse of the monopoly or the oligopolies within the MOP market, the fallout of the Russians. But the SOP price has been remarkably stable. And I guess as a former analyst and former global mining strategist for UBS, I used to wake up every morning and wonder what GDP print or what IP print or what debt number the credit number the Chinese are putting out, because the conventional metal complex is very driven by Chinese data, economic data. Whereas with SOP, really all I worry about is the 60-year trend of population growth across the globe, which is about 1.6%, and how we're going to feed them. The upside of the Mannheim process for us relates to this cost curve, in that we've still got a significant percentage of the SOP production that comes from this Mannheim process, and we believe that given the cost structure of that, because of the input costs, that's going to retain that will keep an elevated price for the market in terms of a marginal cost of production, which if you're in the salt lake production, in the brine production, is going to be very beneficial going forward. So why Western Australia? Well, three reasons. One, because that's where the brines are and that's where the salt lakes are. Secondly, it's from a technical perspective. We are in our lake, or the main lake we're working on at the moment, Lake Wells, is in an area of very, very high inland evaporation. So we get about 3.2 to 3.3 metres of evaporation per year. Just to put that into context, that's about the same as the Atacama Desert, which is where SQM are doing a similar process for lithium and potassium. And it's about 3 times the rate around the Great Salt Lakes in Utah. And finally, the other reason we're doing the other reason why Western Australia is of benefit is that it's a very stable geopolitical place to be investing money, which as a management team we're very happy with. So here's a map of where our projects are. For those of you familiar with Kalgoorlie, this is at the bottom of the page. For those of you that aren't, that's about 600 k's inland from Perth in Western Australia. We've got almost 5,000 square kilometres of salt lakes under our ownership. Lake Wells is the one where we've done the bulk of the work to date, which doesn't make a lot of sense. It's the furthest from any infrastructure, and being a semi-bulk product, the proximity to infrastructure is very important. However, that was the first project that we got the tenements approved by the Western Australian government. We're now doing some work on Lake Irwin, Lake Marmion, Ballard, and a bit on Lake Way as well. Just to put Lake Wells into a bit of perspective, these are some photographs across the lake. And again, just to try and get a sense of scale, this island here is actually that island there. So I mean, this is a massive area of land, and an area under tenure is important, especially with the actual playa surface or the lake surface, because that's where we intend to build most of our infrastructure. And just cognizant of the audience tonight, again, just to put it into another sense of scale. So the Lake Wells from top to bottom is about the same as it is from St Albans to Sevenoaks. So it's a you know, we're not short of space. As I said earlier in the presentation, you know, this is a very, very simple concept, and one of the things that I really want people to take away from this tonight is just how simple this is relative to other mining projects. You know, there are 4 key aspects of the project that we've identified and we've done a lot of work on now. Some people have sort of said to me, you know, the stock's been under the radar. Well, the reason it's been under the radar until recently is that these 4 key processes, we didn't really want to get out there promoting the company until we had all of our ducks lined up in terms of doing sufficient test work and having all this test work validated by independent third parties. And the 4 key steps, I mean, very simple. I'll just read it off. I mean, brine extraction. You know, if you're evaporating brines, you need access to brine. So we've tested the brine extraction, the evaporation pond construction. I'll go into that in a little bit more detail, but obviously very important, and 2 very, very different cost models there. The salt crystallization, well, that's basically through the evaporation process, what salts do you produce, and knowing the evaporation model through the different seasons is very important. And finally, whether you can convert those salts into an SOP product at the end of the day. So on the brine extraction front, there's a pretty simple graphic there. We're digging trenches, really. I mean, it really is that simple. Now these trenches, as we see here, they're about 4.5 meters deep. By definition, with the salt lakes, the water table sits just under the surface, and when you basically excavate through, these trenches fill with water immediately. Now, to put it into context, to produce 400,000 tonnes, which is our initial plan from Lake Wells, we are going to need 200 kilometres of trenches, which sounds like an awful lot, and I guess it is. But we've now excavated you know, significant distances or lengths of these trenches, and we can demonstrate that we can excavate a kilometre of trench for about $40,000. So in terms of the overall capital for the project, trenching is not a big part of it, not a big component of it. At maximum production rates, we will also need to have about 30 bores producing brines from the lower levels of the lake. The evaporation pond construction was really the last of the key items that we had finalised, and the importance of this is that, you know, we are looking to use the clays that are present on the lakes or just below the surface of the lakes. The difference here is that, you know, for our next stage, which is a demonstration plant, we have to construct 400 hectares of evaporation ponds. Now, if we can use the clay on the lake, which we now have demonstrated we can and had that verified, that 400 hectares will cost about $1.6 million. If we had to line them, which some of our peer group are having to use HDPE lining, that 400 hectares would be $42 million. So we're saving about 95% by being able to use the clays on the lake. So the salt crystallization, this is really a key element for us. I mean, for those of you that think this looks like a series of swimming pools, well, that's exactly what it is. But very importantly, they've been on the Lake Wells now for over 18 months doing this site evaporation trial, and we now have a complete set of data for 18 months. So through all seasons, we know what the salt crystallization pathways are, which is very important from a blending and a final processing perspective. You'll note from our releases, we don't talk much about the salt crystallization pathways, because we're the only group in Australia now that's completed this level of test work, and we see it as a level of IP that we're not really willing to share with some of our competitors. But it is a critical part of the setup. And finally, which which was a pleasant surprise to me, was the conversion of the salts into an SOP product. It turns out this is really one of the lowest risk parts of the process. We harvest a salt that is 8% potassium, and we run it through conventional flotation to remove the sodium chloride, rock salt, and then we basically put it through a crystallizer to once it's been converted to shonite to basically produce the end product. Importantly, we've now had this verified by and validated by the SRC, which is the Saskatchewan Research Council. They are the world's leaders in potash, as you would probably understand. So I mean, we're very confident in terms of the level of work that we've now done, and why we're so keen to start getting on the road with this story. So now to the really interesting part in terms of the economics, and these really are quite compelling. We released a scoping study back in second half of 2016, and this was just for the Lake Wells project. So we're looking at 400,000 tonnes of SOP per annum. Now the capital for that is 268 million Aussie, or about 200 million US. And the operating costs are coming in at $185 a tonne Aussie. Current prices are about 725 Australian. So you can see a huge margin. Interestingly, as I mentioned earlier about the proximity of the lakes to infrastructure, what is of significant interest with Lake Wells is that of that 185, there's about $80 of that is actually transport to the port. So when you look at those other lakes that are closer to infrastructure, ultimately, we see multiple potential multiple centres, and the economics for the ones closer to the road and rail are likely to be better than this. In terms of margins, we're looking at the best part of 400 US a tonne, over 400,000 tonnes a year. So, looking at operating cash flows of about $160 million under this study. Our market cap's 80, so we're trading at about half of 1 year's operating cash flow. And one of the benefits of these lakes are that they recharge. When it rains, they recharge. So our studies are based on a 25-year life, but in reality, as these lakes recharge, the mine life will effectively keep going. And for all intents and purposes, it doesn't become a mining company; it becomes a chemicals company, which trade on very different metrics from mining companies. They don't trade at price NPV multiples; they trade on cash flow multiples. So the outlook from here, and what should you be expecting over the next sort of 6 to 12 months? Well, we've made it very clear that we intend to build this demonstration plant in the second half of this year. We've put in the mining license applications and the environmental approval or the environmental work to get the permits in place. So over the course of the next 2 to 3 months, we expect to have some news flow on the mining license applications. We're doing some work on some of the other lakes, so we'll hopefully be in a position shortly to communicate what are the potential resources of contained resources within those lakes. And generally, we're looking. We've also been quite open about our discussions with potential third-party strategics, whether they be industry strategics or financial strategics, and certainly Luke has been integral in those discussions. So it's a very sort of opportune moment to be looking at Salt Lake Potash, I believe, in terms of the news flow over the next sort of 3 to 6 months. And I mean, in summary, we do believe that we are in the process of going through the development of what will be a significant new SOP province globally. If you look at where SOP comes from at the moment and where the growth in SOP production is going to come from, we don't believe it's going to be the Mannheim process. We believe the Mannheim process will still be present, but what does that do for us? Well, that just means that the pricing is very favourable for companies like Salt Lake with regards to Salt Lake or brine production. The demonstration plant is important for us for two main reasons. Firstly, is it gives us about 40,000 tonnes of product that we can put into the market, so it helps us get that customer acceptance. And secondly, it is our view that once we've run the demonstration plant, it ultimately de-risks the project, the entire project, and we can then go to banks or strategic partners to raise the 260 million Australian dollars to fund the full-scale plant. And what does that do for investors? Well, we think it absolutely minimises the levels of dilution going forward, so very important. I'm very cognizant we haven't touched on the markets. Obviously, we don't have much time, but Luke and I are around, and I would heartily recommend having a chat with Luke about the markets. And basically, I mean, to summarise, I mean, we think we are on the verge of sort of pushing this thing into the markets as a new source of SOP in a globally significant province. You know, it's sustainable, it's organic, it ticks all the boxes for sustainable investing as well. And obviously, we'd be very, very happy if you guys were to join us along the ride. Thank you.
Thank you very much, Joe.